I think it's worth being cautious in the markets. I think sentiment remained quite vulnerable, given that there's this daily dose of narrative on tariffs and so much uncertainty and the erratic nature of the macro environment. And we saw yesterday the inflation print is lower than expected, but I think it could just be an endorphin boost, but not going to be a lasting remedy for the fragile sentiment that investors have, because I think investors are more worried about growth than inflation at the moment. So we do need to see, a series of good economic data for investors to be, a bit more comfortable. And of course, the tariff front is unlikely to be resolved anytime soon. I think this is going to be lingering in the background. So I guess it's right to be cautious and be defensive at this stage.
Janet, to that point around a post-workout adrenaline high, this worries me about the European markets because the reality today is we've had some macro data suggesting some weakness still in the growth numbers, even though we've had big promises from the Europeans, from Germany and beyond. Is there any sense that some of the extraordinary gains we've witnessed in Europe could evaporate as we see just a little bit of fatigue set in?
Well, I think near-term fatigue could be possible, especially if there are worse than expected tariffs being announced. We still have to wait for the reciprocal tariffs on April the 2nd. That may well be because I think, as you said, the sentiment on Europe has turned around. But I think over the medium to longer term, I do think that there is a significant re-evaluation of the prospects of Europe because of this increase in defense spending. Now, this is really an area that has more visibility from now on, given the various other macro uncertainty, because the German government is very likely to increase spending, along with other European nations relaxing their fiscal rules. So I think this is a very significant point in the psychology of thinking about Europe. We're talking about potentially a more fiscally loose Germany, which is a complete overhaul of their sentiment, their mindset previously. So I think this is a game changer. And as such, we also have turned less negative on Europe because of this.
How much of the upside from that game changer in Germany is priced into the defense stocks? I mean, just again today, Rheinmetall up another 5%. A lot of these defense names are up around 100% year to date.
Yes, I think, obviously the market sentiment is very much focused on defense, given that it is such an obvious area of where the fiscal spending is going into. But I think it's important to look beyond defense. This is probably the first stage of focus for investors. But what we're talking about is, as I said, a re-evaluation of the region's growth prospects and kind of like the valuation premium that investors give to the area as a whole. So I think we have to look beyond defense and thinking more about the broader sectors that could benefit from this longer term economic boost. Because we are talking about potentially very significant loosening in the fiscal stance of Germany. That is completely different from what we have seen in the past decades. So that should likely benefit other sectors that are cyclically exposed. Obviously industrial sectors, but also thinking more about the other areas, not just confined in Germany, but also in a broader region. So we upgraded the region as a whole, so it's not really just confined to defense.